to this computer. Oh, it's not saying the little message, which doesn't make me feel, oh, it's right. It's obviously doing it without a message. Okay, right. Hello and welcome to Lunch and Learn. Today it's on making tax digital. I'm going to hand over now to Sheryce, who is our expert. Thank you for joining us this afternoon, Sheryce, and it's all over to you.
Lovely. Thank you very much for the intro. So just to introduce myself a little bit more. So my name's Sheryce. I work for a company called Walton Accountancy, and we're sort of based down in Portsmouth. I've been working here for about 5 years. So yeah, and dealing with all sorts of clients. And when I came to one of the sort of meetings in Southampton, obviously a lot of self-employed people, lots of changes coming up. So just here to kind of help clarify the changes, point you guys in the right direction, or obviously here to sort of offer advice and that as well. So obviously, as mentioned, obviously it's being filmed, which I'm happy for it to be distributed to anyone to sort of read through. And I'm also happy to send this PowerPoint over to anyone. There's quite a lot of information in there. Yes, it might be quite good, obviously, if everyone has a copy after to read through.
And it will appear all case studies.
Yeah, so I'll just get down to then. Sharing my screen. Right, I'm not the most computer savvy person, I will be honest. So share screen.
You got it. It's normally at the bottom. Yay. Well done, you.
Yeah. Everyone see that all right? Perfect. Ooh. Sorry, can everyone see the presentation okay?
Brilliant. It's all good. Thank you.
Yeah. Perfect. Right. So just again, a recap for myself, and this presentation specifically is on the Making Tax Digital side of things. As I mentioned, there's going to be a lot of information in this presentation. So if you've got any questions, if you want to sort of keep a note, we can do a sort of Q&A at the end. And then also as well, good practice, if you have got an accountant you're working with, if there's anything that crops up that you want to obviously discuss with them, make a note of it as well. So we'll just jump straight into it. So first part is why are they changing it? So HMRC have introduced this new system, and the reason for the change is mainly to go from submitting an annual return to quarterly, so the information is more up to date, and it's also to try and improve accuracy and less human errors. And the reason for that is, so making tax digital means what it says, getting all of your records from a digital source, such as online banking or bookkeeping software. So HMRC are hoping that with these changes, there'll be less human error, or also, purposely changing things to suit people. And they've also introduced this because a few years ago, they made VAT, making tax digital, and it's been really successful, and it's actually helped us and our clients. So yeah, we're hoping that although it's a big change, it should hopefully be a good one. Now, what is actually changing? So the key features that are changing are keeping your records in a digital format. Now, lots of people keep records in different ways, paper receipts, keep tracking invoices, spreadsheets, all sorts. So how you manage your bookkeeping now is still perfectly fine to do, but it just means we need to come up with that bridge in the middle of, right, how do we get it into a digital format to send it to HMRC? And the biggest change with the self-assessment as well is, instead of submitting one annual tax return, it's now a case of submitting a tax return every 3 months to report your income and your expenses, and then filing an end-of-year statement to summarise those 4 returns you filed, and then submitting a self-assessment tax return. So the requirement for work submitted has gone up quite a bit. But the actual self-assessment tax return deadline stays the same, and you will still make one payment at the moment. In our professional opinion, we're not going to be surprised if they do change it eventually to say you submit every quarter and pay every quarter. So that's just our opinion. Nothing's been said at the moment, but yeah, they might release that. Perfect. So who will it impact? So obviously, I know there's a mixture of people in this group, some in limited companies, some who are self-employed. So this is purely for those who are self-employed or have income from UK property. Now, HMRC's requirements are different over the next few tax years. So the first date to keep in mind is April 2026, which is when the change comes into play, and that will impact you if your income is more than £50,000 in the 12-month period from either self-employment, property, or a combination of them two. If you have PAYE income, if you have dividend income, pension income, any sort of other income, you can ignore that to determine if you qualify. It's purely based on the self-employment and property. Then the next deadline to keep in mind is April 2027, because that's when the threshold will drop down to £30,000. So essentially at the moment, if you're self-employed earning more than £50,000 in your sales, you need to register for MTD. And then in the following year, if your sales is more than £30,000, that's when you'll need to register. They also have future plans to then amend that again, so drop it down to a £20,000 threshold, but there's no definitive plan on that. Now, as of today, there's no requirement at the moment to be registered for MTD, but you can voluntarily sign up early if you wish to. Now, that can be a good idea because it does mean you can be a guinea pig with HMRC, because they are offering that anyone who voluntarily signs up can start trialling the quarterly submission to give you a bit of a taste of what's to come. And if you're planning to submit your returns yourself or do some self-submissions, it might be quite good to do that. It's free to do. Obviously, I'm happy to provide any sort of advice and links for you to do that. And it gives you a sort of taster of what's to come so you're prepared. Yeah, nothing too much else to say on that section. So qualifying income, which I've touched on again, is just to focus on the income that will impact this change, which is purely self-employment and property income. There are certain exemptions. So automatically exempt is if you're a trustee or if you're a non-resident of the UK, there's certain restrictions there. However, the main base of it is if you're filing a UK tax return to declare your income and it's self-employment or property, more than likely you will fall into the requirements. So I thought I'd give a little idea on what the next steps are. So these are the next steps that everyone will need to put in place if they are required to register for Making Tax Digital. So I thought I'd get a little to-do list together, and that's why as well I thought I could send the presentation after, so you've got this to hand. So the first thing to do is to choose a software. Because it's all digital records, it will either be you can start with a bookkeeping software such as Xero, QuickBooks, Free Agent, lots of famous companies like that. That essentially will link directly from your bank account into a bookkeeping software, and then that software can be linked directly to HMRC. The alternative option is called a bridging software, and basically what that is to convert your spreadsheets or your Word document into a digital record to then send to HMRC. In terms of costs, so a bookkeeping software varies. We've got packages that we're aware of that can start as little as sort of £4 or £5 a month for what you need. I know HMRC do also have a list on their website of bridging softwares that they recommend and work with that are also free. So again, for anyone who's looking to potentially submit themselves, there are options that you can do that at a low cost. Then the next thing to do on the to-do list is to actually start keeping the digital records. So what you need to keep record of is pretty much the same as what you've kept record of already. Income details, expense details, dates of the transactions, are they business allowable, etc. But when it says to start keeping the digital records, yeah, it just means use a bookkeeping software or start putting it onto the computer so that it can be converted. The next step would be to actually sign up with HMRC for the MTD. Now, how HMRC are tracking it is when you file your 24-25 self-assessment, if your self-employment income or your property income is over £50,000, when that gets filed to HMRC, it will flag up on their system that you've met the requirement for next year. So depending on what your next move is, because there's a few options which I'll go into further in the presentation, you may need to sign up or you may not need to. So that's why it's important to discuss with your accountant on, do I need to sign up for this? If so, let's start doing it now to get you ready, because if you don't sign up in time, then HMRC can issue penalties for that as well. And obviously, I've made a note there that if you do use an accountant or anyone that assists you, just make sure that they've got, they're authorised where they need to be. So with your Making Tax Digital self-assessment, that they've got access to any bookkeeping softwares or anything like that that you use. The more open you are with your accountant and bookkeeper, the easier it will be, obviously, to get the work through. Yeah, and final note, which no sort of change there, is just to keep any existing records, so at least 5 years worth of records. Now, if you're keeping paper records and then converting them into a digital record, you don't necessarily need to keep the paper anymore, because you've got that access there. But my advice is keep as much as you can, as long as it's popped in a box or a folder somewhere. If HMRC need it, then yeah, it's always there ready to go.
Sheryce, sorry to interrupt you. We can only still see your first slide. Is it possible to share the full deck?
Yeah, it should be. Sorry. Bear with me 2 seconds.
We can see, we could then see the second one. Where have you gone? I can't see her at all.
Right.
There you are.
Is it popping up now?
Yes.
Yeah.
Preparation steps and why change this?
Lovely. Perfect. So did you actually see any of the previous slides?
No.
No. Right, okay. What I'll do then, if you're happy with, I'll just kind of stay on this page if it's moving through so you can actually see the information.
Perfect. Yep, that's great. If that's good with everyone else.
Yeah, that's fine. And like I say, I'll send a copy of the PowerPoint to everyone. So apologies that you've not been able to see it this whole time. Perfect. So the next slide that we're moving on to, hopefully it's popped up on your screen and you can see it, is the actually how to sign up and register. So if you have a government gateway with HMRC and you've already created an account, then you essentially complete the sign up form for Making Tax Digital and you link it to your gateway. You can also, if you have any bookkeeping softwares or bridging softwares that you'll be using, link those all to your gateway as well. And essentially that's how HMRC are going to track who has signed up based on if they have a gateway account. If you don't have a government gateway account with HMRC, that's not an issue. You can simply set it up online and then go through the steps of filling in the Making Tax Digital form. Now, with the signing up and registering, in our practice, any of our clients that need to be signed up and registered, we're doing it on their behalf. Some accountancies are actually putting it on the client to do it. So again, just something to check with your accountant if that's something that you'll need to do or if that they'll assist you with. So what changes for you? So as mentioned earlier, the biggest change is instead of submitting one tax return each year, you're essentially submitting 6 forms. So the 4 quarterly, the final declaration to bring those 4 quarterly figures together, and then your annual self-assessment. And obviously the biggest change will be for anyone who does keep paper records or work on a spreadsheet at the moment. There will be a change in how you do your bookkeeping moving forward. Again, obviously we can sort of give you ideas and tips and tricks on that, and we do have spreadsheets that we can hand out to people if you are looking to use something that's maybe a little bit more complex and tracks your sort of profit and loss. So yeah, obviously reach out to us or your accountant, but those are the key changes. Increased submissions, your digitals need to, your records need to be more digital, and that just means a potential increased administration for yourselves as well. So the advantages and disadvantages. So obviously a big disadvantage that we'll start with is the fact that there's more work to file. And now with that will more than likely mean increased fees to any accountants or bookkeepers that you do use. So I am going to run through further down the slide what our plan is with our clients, so you have an idea on what costing may look like. So let's look at the advantages for the moment. So because you'll be reporting every quarter, it can actually help you manage your business better and also track your cash flow. Obviously, a lot of people in the self-assessment sort of style of filing don't necessarily wait until the end of the year, but we've all had those moments of panic where we think, oh, I need to get my tax return filed, and you just throw everything together, submit it, and think, right, let's wait to see what the tax bill is. By filing quarterly, you can actually work with your accountant a lot better. And each quarter, you can be provided with an estimate on what your self-assessment tax is so far. So then that can help you manage your cash flow in the business, obviously over the next 3 months, 6 months, 9 months, until that tax liability is actually due. It can also assist with better record keeping, where it's going digital, and it means a lot more people will now be using bookkeeping softwares or bridging softwares. It reduces the risk of error, and it reduces the risk of things being missed. So at least you know you can be safe in the mind that if you're paying for everything through your business bank account and it links to your software, all of the information should be carried through to make sure you're claiming as many expenses and saving as much tax as you can. And it can also assist at the year end as well. So a big advantage that we're mentioning to clients is a lot of people get stressed around January time if they haven't filed their self-assessment or they need to pay their tax. We are hoping that with these changes HMRC are introducing, that we'll see a lot of reduced stress at the year end, because while an annual self-assessment does still need to be filed, obviously anyone signed up under the Making Tax Digital scheme will already have all of their records to hand. So it will just be a case of filing that tax return and pressing the button and providing you with any payment details. So yeah, slight advantage there that it could be to help with the stress side of it. Now, in terms of the disadvantages, as mentioned, there's more frequent work, so it means more sort of admin on your side, and that's where you can work with your accountant to see how can you meet in the middle. What is your accountant happy to help with? What do you want to do? What's the cost of it? Are you trying to save money or are you trying to save time? Because as mentioned as well, the cost is the biggest thing. Now, a huge disadvantage, which is going to be on 3 parts here, it will be HMRC, yourselves, and any accountants and bookkeepers you work with, is just the learning the new software. It's such a huge change, and as we all know, HMRC aren't the best at telling us information and giving us training on things, and just telling the world in general what they're doing. So that's a potential thing that can crop up as well, because it's a big change for everyone. It's really key to try and look into things now and get everything set up before the change. So at that point, if there are any, last minute changes or something pops up and you think, I didn't know about this, or my accountant hasn't told me, you'll give yourself plenty of time to try and overcome that. Deadlines is a big one as well, because the deadlines are more frequent. So it does mean that when you've passed the 3-month period to file your first tax return, you then only get 30 days to submit that. So if someone's filing it on your behalf, an accountant, for example, we would request that we have the information within the first 2 weeks, so we can then file it and prepare it in the following 2 weeks. So there's going to be quite a lot of tight deadlines there. So that's why it's really key as well to make sure you've got a good system in place before the change. Perfect. So again, just recapped over key deadlines. So it would be April 2026 when the first changes for the £50,000 threshold, then April 2027 for the £30,000 one. Obviously, I've mentioned quite a few times, but just to recap again, even if you are not required at the moment, it's still probably good to look into it, because if you think you'll meet the threshold next year, you can get ahead of the game and start doing the research, setting everything up. So when it does come your time to file, you're fully prepared. But if you do meet the requirement for the £50,000 and you're really unsure and don't know what to do and all over the place, come and have a chat with me. So I'm happy to provide some advice to anyone if you need it. So big thing that people want to know is what happens if you don't do what you're supposed to do. So the penalties and the risks, as mentioned, the deadlines become shorter. So it's really key that the communication is very good if you're asking someone to submit on your behalf, or if you are filing yourself, that you have a really good system in place to make sure that you get that done. So it's going to be monitored at the moment, and HMRC are going to introduce a system. So they haven't set on it yet, but they're essentially going to introduce a system that if your first quarter return isn't submitted, then you'll get a penalty point. If your following quarter is also submitted late or not submitted, you will then get another penalty point and be issued with a £200 penalty. So what we're thinking they're leaning towards is what they've got in place at the moment for VAT is for each return that's filed late, you start racking up points. And then once you've hit a certain level of points, you'll then start having to pay actual penalties and interest to HMRC. So because of the increased submissions and the increased deadlines, there's a lot more risk that a penalty could be issued if things aren't being done properly. So again, just trying to stress the importance that it's not a huge fine overnight, but if you don't keep on top of it and get a good system in place early enough, it's very easy to fall into a trap of, filing late, penalty. So just to make you all aware of what they're planning to do with that. So some common questions that people ask So if my self-employment is under £50,000, do I need to worry? You don't need to worry.
Sorry, Sheryce, sorry to jump in here. A couple of people put in the chat and it went through my mind as well. The 50,000, is that turnover or profit?
So that's turnover. Just to clarify on that. So that's your income before any expenses is what they're basing this on, which again is quite unfair on the fact that if you have an income of £50,000 but your expenses are 40,000, so you've actually only made a £10,000 profit to use. HMRC are still basing it that you have to register for it because your sales have exceeded that amount. Any other questions on that? Sorry if I didn't clarify that properly. So with the back to the common question. So as mentioned with that, if your income's under £50,000, so if your sales or your turnover is under £50,000, do you need to worry? You don't need to worry, but it's definitely good to start looking into things depending on where your income levels are. If you're sort of £15,000 or below, there's no sort of immediate stress to do anything. If you're reaching around the £20,000 mark, you've got sort of 2 years before you need to press the panic button. But we'd say anything sort of above £25,000, definitely start looking into it now because it means that you'll have to register this either this April or next April. Another big question is, can I keep using my spreadsheet? Absolutely fine to keep using the spreadsheet, but just making sure that you have a software in place to convert that into digital records. And again, with that, I'm happy to provide a link for HMRC's website that detail any bridging softwares that they are compatible with. So if you do want to keep using a spreadsheet, you've got a list there of softwares you can use. Another question as well is if you have multiple sources of income. So regardless if you've got 2 sources of income from self-employment and dividends, or you've got 101 sources of income from 15 different places, the key thing to focus on is purely your self-employment and any property income that you earn, because those are the only 2 forms of income that will require the MTD. Now, if you are self-employed and you have to file your self-assessment under the Making Tax Digital requirements, you will still need to report your other forms of income on a quarterly basis. So if you are PAYE and self-employed, every 3 months you'll report your 3 months of self-employment and then also your 3 months worth of PAYE, again, just to line it up at the end of the tax year. Now, with these changes, again, a massive question is this going to change how much tax that I pay? The tax rates and charges haven't changed, so that Making Tax Digital is purely a change to how it's filed. So obviously it's more regular, more forms, and it's all in a digital format now, but it doesn't change the rate of tax that you pay. So just to put it out there, anyone, if you're looking to work with an accountant or a bookkeeper that might file for you, if you do work with someone and you think your tax liability doesn't look as it normally does, please just check the information, because there shouldn't be a change to your tax unless there's been a change to your income or your expenses. So just a summary over everything we've run through. So the Making Tax Digital purely means moving to digital records and filing quarterly updates, only for sole traders and landlords if their income, so turnover, is above £50,000 for April 26 or £30,000 for April 27. So a few things to potentially look at in this week is review your income. So are you near the threshold? Do you know? Has your accountant advised you? If you have no idea, now's a good time to have a look at that. Also record keeping. So how do you do your bookkeeping at the moment? If it is in paper format, do you potentially want to move to a digital format? And do you need help with that? Who do you need to speak to kind of get that help? Again, compatible software. So if you're using a bridging software to file, then I can provide you with HMRC's link of recommendations. Or if you wanted to use the bookkeeping software, there's lots of different ones out there. And as well, a lot of those link to business accounts. So if you have a business bank account, maybe speak to them as well to see if they have some sort of bookkeeping software that you can get included with your package. And biggest thing is to make sure you've got the dates in your calendar for when these changes are up and coming, and just to talk to a tax advisor, bookkeeper, accountant, anyone that you're working with at the moment, to make sure that you're getting the best advice, you're set up and ready to go, and you know when you need to do it is the biggest thing. So on those changes, it also means changes on the accountancy side. So I just thought I'd touch base on to give you an example of what we're doing so you can start having these discussions with your accountants. Is the pricing behind the accountancy services. So I imagine a lot of you probably just pay a one-off fee to your accountants, or if you do pay a monthly fee, it's sort of like a sort of smaller amount. However, with these changes, what we've decided to do is break our services down depending on what the client needs. So some of our clients are quite happy to do some of the submissions, some of them want us to do everything, and some of them want us to do the bare minimum. So to give you an idea of our packages, that when you do speak to your accountants, you've got an idea of what other businesses are doing, so you can make sure to assess if it's going to be cost efficient. So we've set up a monthly package of £32 a month, and that is if you self-submit all of your quarterly returns and your end-of-year statement, and then we would just submit your annual self-assessment tax return. So the cost for that is about the same as what we charge currently. The co-supported package that we're bringing in is a combination, again, for those clients out there who want to submit themselves or but also get the accountants to do it, is that we would do all of these submissions, but then the client would do all of their own bookkeeping underneath the requirements that HMRC have put in place. And then the fully supported is that we would do everything, all submissions, all bookkeeping, and that's obviously the higher cost. So yeah, again, just to give you a rough idea on what accountants are doing, a lot of accountancy practices haven't released too much information at the moment, which is why I thought it would be quite helpful. So when your accountant does approach you, you've got an idea. Yeah, and then the last option as well, which I won't go too much into because this is very broad. This is an option, but it's all dependent on everyone's specific circumstances, is the option to go into a limited company. That option is there. It can be, it might be a good time for you to do that. There might be other benefits to having a limited company that could work well for you. So yeah, I would say if you are potentially considering that, speak to an accountant or a tax advisor and get their advice on it so that they can tailor it to your circumstances. Yeah, to make sure you're getting the best advice that you can. So that's pretty much the whole of the PowerPoint. Yeah, thank you for listening. Apologies for the little mess ups technology-wise that you couldn't see anything, but I'll make sure to get this PowerPoint sent over to Faye so that she can send it out to everyone so you've all got access to it. And then I've added my contact details on the end. So if you have got any questions on the PowerPoint or in general, yeah, please feel free to reach out to me because I'm more than happy to help.
Sheryce, that was absolutely brilliant. I really appreciate that. I'm sure, are you okay to take a few questions if people have questions?
Yeah, of course. Yeah. Left plenty of time in case people do.
Well, I've got a question straight away. Sorry, typical me. No, let's Helen go. Helen, go. And it won't always be about Faye Dicker. Off you pop, Helen.
It's all right. I don't mind. I think I know the answer to Sheryce already, but I'm just going to check. I have PAYE and self-assessment. I will be under the threshold, I think. But if I go over 30, but it's a combo of self-assessment and PAYE, I take it I don't need to do Making Tax Digital?
Exactly that. So it's purely what your self-employed section is. So if you're £10,000 self-employment and 20 PAYE, yeah, you can still ignore it for now. Be safe, that you don't need to worry.
Yay, thank you.
Yeah. Kelly, so you put your hand up.
I've actually got two questions, sorry. One is, can I just check my understanding around which tax year we're talking about? So if you're saying in 2026, if you're over 50k, is that for the tax year that's just finished, 25 to 26, or is that for the future tax year, 26 to 27?
Yeah, so if your 24-25 tax return, so the year that ended in April, shows that your income is more than 50,000, then you'll have to register from April 2026. So then what will happen is the 25-26 tax year will be your last normal tax return that you file. And then you'll go into quarterly submissions in line with the next tax year. Does that make sense?
Yeah.
So, yeah.
And so if it's the following on 27 for 30k, it would be this next submission would have to be over 30k, but then you wouldn't have to start. Then you start doing it for that following year, I assume.
Yeah, exactly that. It's essentially a year behind because what makes it really complex is for 24-25, you've earned 60 grand, so you need to register for Making Tax Digital from April 26. So you submit your 25-26 tax return as normal, and then from April 26 you do the 3 monthlies. Then yeah, exactly as you said, this current tax year would then determine if you need to register for April 27.
Okay, thank you. And then the other question was, and sorry if I've missed this, if you're a limited company, do you still have to do the Making Tax Digital?
No, so the Making Tax Digital only applies if you report self-employed income or property rental income on a personal tax return. If you've got a limited company and your income is PAYE and dividends, you don't meet the requirements at all, so you won't need to submit a quarterly return.
Thank you.
No worries. Helen?
Hello.
Hello.
Hi, I'm sorry, I was late, so I may well be asking a question that you covered at the beginning, so apologies for that.
No, that's fine.
Well, two questions. The first one was, I've had a total mind blank. Oh, when you mentioned property income, property income, is that still within the threshold, or is it if you have a property, you have to do it regardless of what the income is?
So the threshold still applies. So if you have property from, if you have income from a property that you rent out, and that income is more than £50,000 for the year, you will need to register. Or if your property income combined with your self-employment puts you over that, then you'll need to register. But if you've got a lot of the time, as an example, I've got lots of clients, they have one property they rent out, they get £10,000 a year from it. They don't need to worry about it unless they're self-employed as well.
Okay, great, thank you. And the second question, I think I might have come in at this point. Were you saying that when you register, you do the quarterly submissions, but then you do still need to do your annual submission? Is it just a case that you'll kind of have all your ducks in order anyway, so it'll be
Yeah, that's what we're
easier?
hoping for. Yeah, so it's all dependent on the work that you're going to, the work your accountant's going to do. Obviously, everyone in the group's probably got different setups, so trying to cover all bases. But yeah, essentially, if you're using an ideal scenario, if you've got a bookkeeping software or a bridging software that you use to submit every quarter, then at the end of the 12 months, you'd like to think that, yeah, everything lines up nicely. I submit my end of year statement and my end of year self-assessment, and it should all be nice, squeaky clean. Now, where a mess could come in is, what example that we've sort of spoken about in the office is if the client submits the quarterly returns, but then they ask us to do the annual self-assessment and we do the bookkeeping and the figures don't line up with what they've done, then that's where the errors could come in, because at the end of the year, you then have to do an adjustment. And depending on what that adjustment is, HMRC could potentially apply penalties as well. So that's why if you're set up from the start and you've got a really good system in place and you've got, an accountant, bookkeeper, whoever helping you do that, then it should be nice and neat and actually not be too much admin work at the end of the year. But yeah, depending how good your work is, it could cause issues at the end. And yeah, it's essentially HMRC are just looking for, right, tell us what you're earning every 3 months, give us your end of year statement to say that it all lines up, and then submit your tax return just to declare all of your income in one go. That's what they're aiming for. Yeah.
Thank you.
I think it's Karen next, actually. She's been waiting a while.
Yeah.
Oh, hi. I had loads of questions, so I have to prioritise. So I've signed up for a metal account. That's as far as I've got, because I know it comes with free agent. So I'm planning to get sorted on that. My question is, obviously, there's going to be a process of moving over from spreadsheets to using a software to not using the current account that I'm currently using for business to metal. And there's going to be this potential crossover period. Is it reasonably easy to align everything? So for example, like costs like working from home costs, where generally what I do with that one is work out all of them at the end of the year, because they all come in all staggered. So I'm thinking now I'm going to have to work out like a quarterly working from home cost and then manually put that into free agent. Is that right?
So you can still include end of year adjustments. So with the use of home, you can still include that at the end of the year. It's basically, as long as there's some sort of explanation on that end of year statement to say, why do your total self-employed figures not match up? We can say, here's the actual income and expenses for each quarter, and then here are the end of year adjustments that we've included, because HMRC also know some of those allowances, it's very difficult to sort of break down into monthly or quarterly payments. So yes, you will still be able to do those end of year adjustments. So anything that you normally do at the end of the year, you can still leave until then. The key thing that HMRC are looking for is consistency, that you've got income and expenses traveling through, that there's no huge cash payments, and what they're looking for as well are patterns on, as we get closer towards the tax year, if people's income starts decreasing quite significantly. So yeah, things like that will still be allowable as long as there's a reasonable explanation for it, which you can put on your tax return in the additional notes section. The actual breakdown of when you file the end of year assessment, HMRC they've put word out to say that they're going to include a notes page on that, but they haven't confirmed exactly what it will look like. So there will be some sort of notes page to go along with the self-assessment tax return for those end of year adjustments as well. Yeah, that's as best as I can answer your question until HMRC give us more information, unfortunately.
Okay, that's fine. Thank you.
Thanks for that, Sheryce.
That's all right. Who have we got next? Joe, I think Joe was waiting next.
Thanks. So, yeah, I had a couple of questions. I noticed on your fees, or you'd put that there was Making Tax Digital registration fee of £100. Is that to the government, or would that just be for you guys? Is that what everyone's going to have to pay?
Yeah, so there is a registration fee. And the registration fee at the moment is actually £50. We're charging £100, obviously, on our clients because of the work that's needed behind it. But again, there's still talk at the moment, potentially being announced in the budget, of them scrapping any sort of registration fees for Making Tax Digital, and the budget's not until the end of the month. So at the moment, there's a registration fee in place, and us and probably a lot of other accountants are going to charge a little bit on top of that because of the amount of work required. But HMRC might change it completely and say that you don't need to pay anything. So yeah, I would say with this, because a lot of it is still up in the air and not definitely confirmed, yeah, keep in contact with your accountants, your bookkeepers, keep in contact online. And obviously you've got my contact. I'm always more than happy to provide you with an update if you just want to know if they changed anything. Yeah, so as of today, yes, there's a fee. It should be £50. May change.
Yeah, thank you. The second question was, you've mentioned the sort of 50,000 threshold and the 30,000 threshold, and I think you said that it would be lower thresholds would be sort of introduced later on. Do you have any sort of further details on that, or could you kind of like guesstimate?
Yeah, so the only note they've given us is that they then plan to. So April 26 is the £50,000. April 27 is the 30,000. They have said that the following year, so April 28, they would reduce it to 20,000, but they've not confirmed it.
Okay.
And again, I think part of the reason they haven't confirmed it is, in our professional opinion, from lots of discussions with our accountants and things that HMRC have released, we seem to have the impression that they're going to bring in their Making Tax Digital changes, and then after 2 years, once people have gotten to the swing of things, when they reduce the threshold to 20,000, that's when we think they'll then more than likely introduce that you start paying your tax on a quarterly basis.
Okay.
And that's why we think they haven't fully confirmed it, because they may change it again. So yeah, that's the only information they've released. They've not said anything else after. It's just a £20,000 next threshold potentially.
Thank you. That's really helpful.
Okay.
Anna.
Yeah.
Anna, have you got a question? You're on mute. Sorry, your hand's up. Or at least it was.
Hello, sorry, I was on mute. Hi, can you hear me well?
Yes, all good.
Amazing. I was going to ask, somebody asked a question earlier about the limited company, and I have very much the same question because I have a business that I run, and it's a limited company, and I just wanted to double check about the corporation tax. The reason is because I actually had attended a presentation by the accounting company, and they assured me the corporation tax has to be digital as well, very, very soon. I just want to make sure I understand it correctly, because what you're saying that these changes only apply to self-employed and property income.
Yeah, so
Um,
corporation tax is a separate tax for limited companies, as you mentioned. So these changes are only for the self-assessment filing, so it won't impact your corporation tax. However, yeah, because without knowing the ins and outs of the conversation you've had, and without knowing the full breakdown, they could have potentially been talking about a different quarterly submission, which is specifically for corporation tax. But there's lots of sort of requirements on that. So I don't know whether maybe they've got their wires crossed on what they've told you. But just to clarify, as you've got a limited company, your corporation tax is a separate tax. So you'll just pay that in one lump sum 9 months after your year end. And then your income for your self-assessment, if you have self-employment or property, that's when you need to look at the making tax digital. If you don't have any of that on your self-assessment tax return, then you don't need to worry.
okay. So, do you have any, like, I don't know if you have any insights about whether they are planning to make corporation tax digital in the same way as well in the future?
Again, they've had discussions on it, so they haven't mentioned bringing this in for every tax. However, with corporation tax, it becomes a little bit more difficult to go into the quarterly submissions. So yeah, they've not confirmed anything. Nothing's been set in stone, or they've not even said, yeah, this is what we plan to do next year. There's been talks on, oh, they probably will do this to corporation tax at some point, but nothing at the moment. So for corporation tax, you can still just pay the one payment at the end of the 9-month period. And nothing at the moment. But again, the budget's this month, so they may potentially announce something in there, but they've not announced anything widespread on their actual website or anything.
Thanks.
Okay.
Anna, should we
And
take
what
off?
about the
Go and carry on, and then
uh,
let's take our final question from Karen,
mhm,
unless anyone else wants one.
just the last one, the dividends, because obviously dividends go into the self-assessment.
Yeah, so
Are they
dividends,
also
they don't count towards the making tax digital. So dividends on your self-assessment, you'll just pay the tax on that as you do at the moment.
okay? Thank you very much.
That's okay.
Thanks for that, Anna. And Karen?
Just last one. Going back to sort of setting up something with software, going with Metal and Free Agent. If you have a property and a self-employed business, and you mentioned earlier you've got to do those, keep them separate. Is that possible within the free version of the software? And can you just have the one Metal account for your property and your self-employment business, or do you have to set up then two and then two?
So you've got a few options. So HMRC are saying keep everything as separate as possible, but they're only saying that because it keeps things nice and neat and easy. The reality of life is that means it's more costly for you guys. So that's not always a simple case. So to answer your question, you can put both streams of income through one bank account. But the key thing is that when it links into your software, that you can easily identify what is for self-employment and what is for property, and allocate those into a property income account and a self-employed income account. So the advice that I give is essentially, if all of your income did go into one bank account, if HMRC sat down and said to you, well, is that self-employment or property? Could you give them that answer? If yes, if your bank account gives you enough information to say what each income's for, what each expense is for, and you can give that information to HMRC easily, then you've got no problems doing that. But if you combine everything and it means that you cannot separate it out, if HMRC sat down and asked you the question, then the advice would be separate bank accounts for separate streams of income and potentially separate softwares as well. Now, I'll be honest, with Free Agent, I've used it a few times, but I don't know too much about it. From what I've accessed, you can add multiple bank accounts onto there. So an option could be that you set up different business bank accounts, but connect those to the same software. So then when you're in your self-employment account, you would just allocate it all to your self-employed income expenses. Then when you do your property account, you put it to the property side. So essentially, every quarter, you'll be given this big report that says property income X amount, self-employment income X amount, and then all of your expenses will also be broken down like that. So that's kind of a bit of the best of both worlds, that you're paying for one software but have it split up in 2 bank accounts to sort of keep it nice and neat and easy. Yeah, and in terms of then actually doing the bookkeeping on it, there would be some things that you need to put in the settings, but I'm more than happy to provide you some like specific advice on that. If you wanted to pop me an email, then I can kind of give you a step-by-step on what we'd recommend to get that set up.
Thank you.
No, that's okay. And I think Emma's just popped up at the end there.
Yeah, sorry, just thought of one.
That's okay.
One thing I always get really muddled about is like allowances, because I work from home. So there's a lot of crossover with things that I use for work, but I also use for personal Wi-Fi, phone contact, whatever. Is there a recommended tool or template or something I can use to figure out what how much of whatever I use I can put in the tax return?
So you've got a few options. So option 1, which is the most complex, but will give you the most accurate answer, is to actually gather your bills. So you can't include any fixed bills. So the only bills you can include in the calculation would be sort of like your gas, electric, your Wi-Fi, things like that. And without going into too much detail, because it's a very boring calculation, but essentially you assess how many rooms you've got in the house, how much are your bills for that month, and then you split it up into how many hours are you at home working and things like that. So that's the complex one, but the most accurate one. The alternative option is to use HMRC standard allowances, which is what we do. So we don't actually, I've done it a few times for clients, and it's actually always worked out better to just use HMRC standard allowances. Now, their allowances change and are different depending on who you are and what you're claiming for. So if you're claiming through PAYE for some cleaning and clothing, for example, the costs are very different to what you can claim through if you're self-employed or a limited company. So the advice that I'll give you, which we use for all of our clients and is the standard practice, is we claim an annual figure of £260, which is for cleaning. There's no specification. HMRC have basically said you can claim £260 a year towards any cleaning that you can't physically receipt for. It's also £260 a year for clothing or staff use. And specifically for the use of home, so it's a higher allowance, HMRC give £20 a week. So it works out as £1,040 per year, which it doesn't sound that much when you look at your bills as an overall across the year. However, when you take into consideration what HMRC actually allow in the calculation, the £20 a week allowance 9 times out of 10 works out more than what you're actually paying on your bills anyway. So you know it's kind of a safe bet to use, that HMRC say, yep, you can have it, and you're more than likely getting the most out of it tax-wise as well. But again, if you do want some more specific advice, if you pop me an email, I'm more than happy to kind of discuss with you how you can do that use of home calculation. So if you did want to try it that way instead, then you've got the sort of tool there to do on a monthly basis.
That's great. Thank you.
Yeah, no worries. Sorry, it's all very in-depth answers, isn't it? Tax is just so complex.
Karen, have you got another question, or is your hand still up? That's fine. Sheryce, thank you so much for, gosh, that was a really, really mega packed, and also for complete transparency with your own fees. I think that's really useful when people are going around and trying to suss things out. We talk a bit about transparency with pricing, and it is ever so useful when people just say, actually, this is the ballpark figure. You got that now as a benchmark to go out and get your own quotes from as well. So really, really big thank you. That was massively useful. If there are any changes or updates, would you come back and give us an update on things as and when?
Yeah, that's absolutely fine. So what I will make you all aware of, which is like the worst timing, but just to make you all aware, is I'm actually not going to be working here much longer. So I'm moving away from Walton Accountancy. Nothing to do with work or anything like that. No bad omens. It's a personal reason. But what I've made my colleague Tilly aware of, who does similar to me, does lots of sessions like this. I've made her aware of the training session we've done today. So then, at any point, if you guys reach out and you want some advice from us, or again with updates that we can provide you, Tilly will then sort of take over and manage all of that to keep in the loop with you, so you're still getting the advice even though I won't be around anymore.
Oh, well, best of luck with whatever you're doing next. You've been
Sorry, typical timing, but I thought again I'd rather be open and honest rather than one of you email me in 6 weeks and think, oh, she doesn't work there anymore. It's planned, but you'll have a point of contact here if you need to use her. So yeah, and she's really helpful. So
that is incredibly kind and generous. Thank you, Sheryce and Tilly as well. And best of luck with your next adventure. Yes.
thank you very
Good
much.
luck if it involves doing your own tax. You're the right person for it. Right. Okay. Have a lovely rest of the afternoon. I hope you're all super duper productive, and we shall see you soon. Thank you, Sheryce. Bye bye.
Yeah, thank you. Bye.
Bye.
Thank you.